before I go too far off, my thought there is more so on kind of this transitionary phase where people are having that paradigm shift. They're finding Bitcoin, they're digging into it a little bit and saying, "Oh, wow, something's different here than what I thought." And maybe I love that meme, the meme template with Fry from Futurama where he squints his eyes. The more you dig into Bitcoin, the more squinting my eyes become, because it's like, I don't know if I believe what you guys are talking about. And I think something that's interesting, and so I'm going to pose two questions. One is, what is your thought on that kind of transitionary phase where people are coming to realize that things are maybe different than what they thought? And the second part is about Bitcoin bonds. And I think that in that transitionary period between, let's say, fiat land and a Bitcoin standard, there is going to be some weird kind of hybrids that I think seem to make sense to some degree, depending on kind of what parameters we want to put on the conversation. But so first question, the transitionary period, and then second piece, Bitcoin bonds.
The transition is interesting because there's that famous saying that you don't change Bitcoin, Bitcoin changes you. And what's really interesting is when you first start that process of study, you automatically think, okay, bigger blocks, duh. Like, wait, what are you guys doing? Like, this is simple, make the blocks bigger. But then you start to realize, well, wait a second. If we make the blocks bigger, we lose decentralization because now it's really expensive and technical to run a node. So you start to learn all of these different trade-offs. But I think that real transition happens once you become a user. And that's why we say, we just have to get these politicians to start to participate. And that's where the number go up technology is. So we know how good the politicians are. They're the best traders in the world, right? I mean, they make the hedge funds look stupid. These boys are putting up big numbers. It's actually wild how good politicians are.
The secret ingredient, all it is crime and corruption. That's it.
It's sickening, actually. But Bitcoin is now wiggling its way in. Why? Because of the invisible hand that motivates markets and creates incentive, profit. That's why. And these Bitcoins these Bitcoiners, future Bitcoiners, they don't know it yet because they think they're going to change Bitcoin, but Bitcoin actually changes them. And that's what's so interesting about your original statement of traditional finance is all about rates of return, isn't it? And what triggered in my head when you said that is that the whole system is flipped upside down. So I think what's going to initiate this mass adoption, what's going to initiate this mass awakening, we need something. Look, if 9/11 didn't do it, and then COVID didn't do it, what's going to do it? What's going to be? I mean, we shut down the world and told people they can't go to work and you have to wear a mask and take medicine. If that didn't do it, then I think we know the word is true, right? Only Holy Spirit is going to reveal and give you ears to hear. But something has to happen. And I think what's really going to happen is in the traditional world, on the physical plane, not the spiritual, the function of interest rates is going to shift. And right now, the problem is, and it makes perfect sense if you think about it. It makes sense in a regular true free market for you to have no debt and for you to lend your money. Because the first thing is that when you have no debt, you have no interest liability. You don't have to add and produce extra value in order to pay back on your capital, right? So when you borrow money, you should be taking risk. Like if you guys borrow money to start your podcast, you have to get a return on that investment because you have to not just get the money that you borrowed, you have to get it back with earnings, with interest applied. So you need to get sponsors. You need to go out and take action and provide value so that the person that enabled you to provide value can get back principal plus interest. Everybody watching right now is probably like, yeah, that's common sense. Yeah, but that doesn't work that way. You know why? Because the government and the banks are the biggest borrowers in the world. That's why. When you deposit your money at a bank, the reason they pay you interest is because you're actually lending them your money. And when you buy U.S. treasuries, that's you lending your money to the U.S. government. So the biggest borrowers in the world by far, and I mean by substantially, I mean personal income credit hit an all-time high, just over $1 trillion. The United States government has $35 trillion in debt, $217 trillion in unfunded liabilities, and the banks currently have customer demand deposit liabilities of around $17 trillion. So when you combine those two things, we're talking well over $300 trillion of borrowing versus about just over $1 trillion of borrowing for we the people. So the biggest borrowers in the world are governments and banks. So of course they flip the script. And once people see this, hopefully this is that transition moment. I think when they see this, they're gonna be like, whoa, I've been lied to. I've been scammed, because real interest rates are actually negative. It makes more sense today to have debt, as long as it's a fixed rate debt, right? Like variable credit card rate debt. Yeah, pay it off, get rid of it, because it'll kill you. But a fixed rate debt, like a mortgage, I mean, you should see people, some of the boomers I talk to, their jaws drop to the floor when I tell them, yeah, I'd be happy to take a mortgage, even at 7-8%, and to buy a house that's a little bit overpriced. Yeah, I'd be happy to do that. And they go, well, why would you do that right now? Why wouldn't you wait for lower prices or wait for lower interest rates? I said, because the rate of inflation is 11%. So I don't care if I borrow 8%, I'm still earning in purchasing power terms. I am being paid in terms of purchasing power to borrow. And one day, if I borrow money and my monthly payment is $3,000, I believe sometime in the next 30 years, I will be able to go out to the street, pick $3,000 up off the ground, walk into the bank, and pay my mortgage for that month. So what does that mean? That means for the borrower, you have an asset, because that $2,500 is a fixed cost over time. Imagine the people right now. It's wild, really, because you have a lot of people who locked in, especially wealthy people who locked in interest rates below 3%, and they bought $1 million home, and their monthly payment is like $2,000. Well, if you want $1 million home today, you're talking about like $6,000, and it's like, whoa, wait a second, you have a beautiful home. It's only costing you. Imagine how happy those people are, only paying $2,000 fixed cost. $2,000 to pre-2020 versus $2,000 today is a huge difference. $2,000 today is like, this is great. I can't believe I'm only. You watch all your prices, all your costs go up, but what stayed the same? The price of your house through your mortgage. So you see that debt that a lot of people would say, because they've been taught the traditional practices of finance, where interest rates and returns are the whole cash flow is the name of the game, right? We're transitioning from cash flow to purchasing power. And that's what this is about. We got to flip the script so that it makes sense to lend money again. Because when you lend money, you should receive back increased purchasing power, not decreased purchasing power. Now, the banks and governments don't like that because they're the biggest borrowers. But we, the people who are the biggest lenders, Bitcoin offers us this opportunity. And I believe, like on the physical plane, that is going to be that orange pill moment for the vast majority of people who finally start to understand, wait a second, it's not about the cash flow. It's about how much I can buy upon maturation of the note. And we can leverage that reality right now with Bitcoin bonds by taking the best of both worlds to empower we the people, to empower borrowers, and also to keep these lenders in check.